What is up, ladies and gentlemen of Tradecaster.com, baby? We are back and at it, guys, bro. We are back and at it. We are here for FOMC meeting. What is up, Tradecaster? So give me 1 second, guys, as I get everything ready. Guys, I'm gonna be entering my position soon. I've been waiting all day to take a trade, guys, and I'll show you exactly what I'm taking. I will show you exactly what I'm taking. Give me 1 second. Exit out of that one as well. Give me 1 second, guys. Okay. All right, guys. All right. So I'm gonna show you exactly what I'm entering in. Guys, I hope you guys have had fun. Just got done a stream over on Kick, a little bit of COD and whatnot. But I'll show you guys. Give me 1 second. Let's all open this up. All right, guys. So if we go to Tradeovate, we're coming over here, guys. Sorry, my throat is like really. You guys are like, damn, YB, bro. YB, dude. You gotta work on that, dude. I don't know what's going on with your throat, dude. It's like, all right, buddy. All right, guys. All right, buddy. All right, guys. So give me 1 second. Let's extend this a little bit. We're gonna bring this in a little bit more, just like that. Yup. Okay. Coming on and into play, guys. FOMC is happening. This is exactly why we hopped on today. This is exactly why we're here, guys. Let's go down. So why do we have you go here? You see we have 4 accounts of 50,000, two new $50,000 accounts. Okay, YB, what does that mean? YB, why do you have 2 new 50Ks loaded up? What's going on? I'm gonna go long on ES, guys. MES. Basically, I'm thinking MES or MNQ. I need to think of which one I want to do. I need to think about which one I want to do. Coming up into 2 p.m., guys. Anyways, I'm going to go long on 20 micros. 2 contracts each side. Nah, I'm thinking about just doing the minis. Just because I'm in and out, guys. That's the game plan, to get in and get out, guys. That's it. So I'm thinking about, I'm just going to do NQ. 2 contracts, or even 3 contracts to each side, just because the whole point is one of them's gonna lose, one of them's gonna win. And then I'm also gonna trade my normal 50k account with it if I want, and 150k. But the big play is gonna be right here off that 2 p.m. news. This is gonna have to be able to load up super quick, because I'm gonna be buy in market at 158, 159, and then sell immediately, bro. Like, basically passing one of the accounts. Yeah, and that's it. That's it, guys. That's how I plan to trade it. In and out, baby. In and out, in and out, in and out. So yeah, buddy. So guys, we got a little bit of time here. I hope you guys are loving this market right now, guys. Let's take a look at it. So what happened, guys? Exactly what we kind of thought was gonna happen here. Let's make this wider and let's make this smaller. There you go. So guys, exactly what I thought. This is a bigger move than I even thought was going to happen, guys. But now getting that chop as 12 hit, noon hit, that chop city, guys, up and down momentum. This is a lot more movement than even I thought was going to happen in the first place, ladies and gentlemen. I thought there was going to be absolutely no movement today. So 100%, I will admit, there's a little bit more movement than I thought. But that's okay. That's completely fine by me. Guys, I'm waiting. I'm watching. We are all into it, man. We are all into it. So I'm gonna go check out a couple of these other streamers here. Gonna go check out a couple of these other streamers here. Gonna go see them, get them in, give them some little bit of motivation as we wait, guys. So, give me 1 second, give me 1 second, give me 1 second, guys. So yeah, ladies and gentlemen, gonna go check out a couple of these other guys here. Hoping these guys print. We're all live, basically. We're all live, dude. So, guys, you guys have multiple options today, ladies and gentlemen. Me, Caesar, Deck, Kush. Kush is live. Is Kush live right now? Oh. Oh, no, that's earlier today's stream. Okay, okay. Kush not live, but we got myself, Caesar. We got a Deck. You know, there's multiple here. If I go view all, then we got AK, Active, J Trades, The Reason, aka Zeke. And that's it, man. I mean, we got a bunch of streamers live today kicking it. We are good to go, baby. So I hope you guys are printing, profiting. If you guys have been trading today, if you guys are not trading, you guys are waiting till 2 p.m. I'm with you, bro. Let's get it. So hey, Camus saying, anyone know the anything about the company symbol Tech? It has been dropping fast. Tech. We got a few minutes here, guys. I'm not gonna put that. I'm not putting that trade in until later today, guys. company called Tech on the daily chart. It's crazy weak. Yeah, I got you, buddy. Yup. Oh man, bro, that's a falling knife, dude. I would not get involved. Unless, yeah, let's see. Yo, what's up, Caesar? What's up, buddy? What is up, my friend? Let's see. Camus. Let's check out news on it. The capital management sector performed on biotech. Dushan Bank shoots biotechnician price target from 70 to 100. Yeah, man, it's dropping fast, man. That is rallying to the downside. That is just, you know, I don't know. It had a bad earnings, it looks like, as well, already off of falling. So, you know, if you're gonna punch in anything, maybe a couple shorts, but it's so low now that you can't go long because you can't be mad if it drops down to like 15 bucks. You can't go short because you're already so overextended. You can't be mad if it spikes. So yeah, I'm good. And you, bro? Oh, pretty good, man. Pretty good. Just been chilling out. No trades myself. You ready for the bro? Dude, I'm so ready. Dog, I am so ready, bro. This is what I've been waiting all day for. I just want to see something, dude. Like, if this market comes out with interest, like you're saying, bro, if it comes out and we do raise, oh my goodness, ladies and gentlemen, bro, this is gonna be crazy. I'm hyped. All right, so I'm loading up puts on one and calls on the other. Okay, so I'm gonna be looking to take profit quickly on one and then sell the other one as well. Well, it should stop itself out, but yeah, I might take the risk on the 150k as well. But yeah, bro, it's gonna be fireworks, dude. It's gonna be crazy. But yes, Camus Tech, I would very much just maybe keep my hands off of. It's like, because people are gonna be, I don't even know. I mean, if you're gonna get involved, you can't go long. It's hard to go short here either. Like, this is a falling knife, but it had bad earnings, it looks like, right? Looks like it had, so let's see this. Earnings 0.39 estimate, 0.41, never mind. Isn't that good? That's good. That's good. And didn't they make earnings last year? 0.48 and actual was 0.55. So even last year they made earnings, but it doesn't seem to be helping the company out. So I don't know exactly what is going on with them, but we will see. Their next earnings is February 1st there. Yep, February 1st is their next earnings. That's our next earnings time in a way, yeah. So that's really how that works. So we're gonna see, guys. So yep, Camus, I would definitely just maybe get involved in a small short position. Longs, I mean, if today the earnings came out and that's what it was, I would consider longs. Since it was good earnings. If we take a look at last year around this time, or last earnings report around this time, guys, what was the earnings date? Yesterday, okay. Yup. And look what happened last earnings. So they did still sell off a little bit, but they had a little bit of a spike to the next sell-off. So you might be able to catch a little bit. I don't know. It's confusing, Camus. It's too confusing for me to get involved in. I'll say that. It's too confusing for me to get involved in. Wow, look at overall NQ, guys. The girl brought me an espresso drink, so if I'm a little hyped up and that YB energy's back, that's why. Woo! Oh my goodness. Okay, guys. We are ready, baby. We're ready for fireworks to fly, baby. So, guys, this is gonna be crazy. I'm feeling 2 on each side. I think I want this pulled up to like right there. Gonna even small in that end up, so that's like that. So it's right there, guys. I can just bink. Have this extended to there. NQZ3. So it's gonna be like this. Bink 27, 26. 27, 26. Open P&L wise. Where is the P&L? Yes, I want it right there, just so I can do this. 27, 26. 27, 26. You guys should practice that. I used to trade NFTs, baby. So you guys already know. I used to trade NFTs, so my fingers were ready, bro. I used to have that refresh button on lockdown, bro. I used to be good with it. All right. Who's ready to short? I'm short 1 micro on ES. 1 micro right now. Oh, Caesar, dude. Caesar's ready. You know, Caesar, I might join you. Caesar, I might join you on my 150K on a micro. Just because it's the 150K. You know what I mean? You know. Okay, so Caesar was talking on tech. Yeah, it's a hard play for me. I personally wouldn't get involved. But what is that? I'm setting a buy order on 200 EMA on monthly. What do you think is the best stop loss? On 200 EMA on the monthly. probably underneath the 200 then, right? On tech, right? Let's go tech. Let's go tech. Let's go to the monthly chart. Okay, right there. 1 month. Okay. Where's the 200 EMA? So for me, the 200 EMA is all the way up to 77 while it's down to 50. If that's what you're talking about, unless I'm not seeing it, unless I did something wrong, this is a 1 month. On monthly, what do you think is the best stop loss? If you mean like you're gonna go long up here, I'm setting a buy. Like you're gonna go long. Oh, brother. I don't know about that, man. I'm gonna be honest, Camus. I don't know about that. I mean, yeah, bro, that's like, dude, this thing looks like it had its IPO day at 10-2, and it's gonna reverse, although, I don't know, man. Unless I'm seeing something you're not, or you're seeing something I'm not. But yeah, bro, Caesar, I'm ready, bro. So, I'm not against catching the drop off the rip. I'm gonna do it anyways. I'm gonna get in here in the next 5 to 10 minutes real quick on 2 contracts either side. On NQ, I might do ES just because it makes more sense. It's going to go right with the S&P 500 rather than NQ do its randomness. I think that's kind of where I'm at. I'm going to do ES. We're going to do ES, so we're going to do 3 contracts each on ES. Okay? So it's going to be buy market, sell market, right? I hear you, but the 200 EMA is on 47. Okay. So, yeah. So, like, your EMA is down here, huh? Maybe I'm on a different interval. Camus, if you could show me your chart then. If you could send me, like, send a screenshot in chat, that'd be a little bit better. Because, yeah, that's kind of... I'm at 70, you're at 40. Right, dude? So, we're, like, completely off. I mean, if I see it at 40, then I'd probably be a little bit better. Yes, a buy on the 200-day EMA is great. Anything under that, as long as the view up and the 50-day are not under it. If the view up or the 50-day are under it, that's your stop loss. Whatever point's under it. If your 200 EMA is the only thing holding this up still, just get the bounce. Okay, it goes to 200-day EMA. Maybe put like $1 underneath the 200-day EMA. But if it doesn't go, if it keeps going past $1 underneath, get rid of it. That's it. As long as your view up and 50-day are above it. Yeah, buddy. Charting Queen in the house. Let's print this money. You already know, baby. Yeah. Yup, guys. So we are chilling out, guys. We are chilling out, ladies and gents. That espresso coffee got me going, baby. I'm not even gonna lie, dude. Oh my goodness. I feel fucking cracked right now, guys. I feel cracked, bro. Alright, guys. Guys, I'm looking, guys, my only risk is that it spikes up and spikes down. If it pops up and I'm in and I don't take profit quick enough, ladies and gentlemen, you will get stopped out the second it pops down. It's a trailing stop loss. So if you're doing the same thing as me, you gotta be cautious. Okay, yes. Camus. Yes, 100%. Right at that is not a bad entry. That's a good entry. If it does not bounce off that, though, if it goes like $1 or $2 below it, cut it. If it goes like $1 or $2 below it, like look at past chart history. Past chart history states, what is that, $1 or $2 below on that little green wick, another $1 or $2 below that green wick. If it goes like $2 below, bro, cut that thing, dude. You do not want to be in there for that wildness and randomness to the downside. You know, that's what I got, dude. I would, yes. So that's not a bad play. The 200-day bounce, not a bad play. Okay, so each mini per dollar. Okay, how much do we think it's gonna spike? Like $10? Like $10? How much do we think it's gonna spike? I'm gonna enter in, guys, at like 56, 57, 58, something like that. I don't want that random spike like a minute beforehand to like cut one of these positions out or make like or kind of F with it. So that's why I'm waiting, guys. Actually, I will join Caesar, though, on a micro to the downside. On MES, I will join Caesar on that. Because if this thing comes out, bro, with bad news, not bad earnings, excuse me. Bad news, bro, it's going to go crazy to the downside, guys. So I'm going to get in right now.
Order filled.
1 micro ES to the downside. If this thing shoots down, guys, it is going to go crazy to the downside, guys. It is going to go crazy to the downside, guys. All right, so I got 3 ES loaded up. 3 ES. Normal contracts to the downside, guys. Just so if I was trading micros, I would have to get filled on all these micros, and sometimes they don't fill you on all the micros. You're getting in on 40, 50, 60 micros, bro. They're not always going to fill you out when you want to get out. So, like, let's say I go click sell, I might get filled on 40, but now I'm still in 20 more. You know what I mean? Like, no. Just trade the ES. You're going to get filled on those. You know it. All right, what time is it? 55, guys? 55. I really need to set up hotkeys. That's what I should do. We got 4 minutes left, and I gotta take a pee. So, bro, I gotta go pee so bad. I gotta take a piss. I gotta take a piss so bad, guys. I should have pissed before this. I should have pissed before this, guys. Alright, ladies and gents, we got everything loaded up here. Sorry, I had to stick in my Invisalign. We didn't want to put that on camera. Alright, it's 156 in this market, man. 157. I'm gonna punch my orders in. I think 158, guys. 158. Or 159. Just because I just don't want that random pop right before the news comes out. That can happen. It's happened before. People just get excited and then it'll jump to the top side. But now your trailing stop loss is up there. Now I'm at 50,000, 51,000 flat. Now I can only go down to 49,000, not 48. I don't want to deal with that crap. I don't want to deal with any of that bull crap. I just want to have it simple, nice, easy plays, baby. Okay? Okay. Yeah, buddy. Woo! We're here, baby. We're here, ladies and gentlemen. We are in the building, guys. We are in the building. So, yup. We got ourselves all ready to go, baby. It's about to get crazy, guys. Woo! Hopefully you two guys are ready as well. So no entry for myself. I am in on this account though. It's on 1 micro to the downside. I'm just waiting on it. One micro to the downside. 150K account, guys. Nothing crazy, guys. Guys, $3,000 on ES micro would be the equivalent to $30,000 on a mini. So to lose $3,000 on 1 micro, you would have the equivalent to lose $30,000. I'm quite sure that's, or 13,000. 13,000. I'm pretty sure it is, not 30. 13,000 on a mini, which is still freaking crazy. But imagine making that much, bro. I think that the market ES would have to go. Hold on, these are both. ES would quite literally have to rip and run like an immaculate amount, bro. Okay, 159, guys. I'm punching these in. Ready?
Order filled.
Bill?
Order filled.
$75 per. Oh, that's actually a move. All right, guys. All right, you got to know. So I'm long on this account. I'm long on 27, short on 26. Long on 27, short on 26. Short on 26, long on 27. I'm going to stick on the one that's short, just in case it gets crazy to the downside, guys. We got 15 seconds left, guys. The market is flat right now, guys. We are sitting still. I want to see this thing come down. I'm going to click buy market, sell market. I'm not doing join ass or sell ass, guys. News is out. Let's see. Okay. Are we ripping? Is that it? Did we get as expected or... Waiting. 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 Going to 27. Going to 27. Going to account 27. In 3 micros here. Don't want to see anything too crazy happen. Are we holding this? There it goes. There it goes. Got my finger ready, guys. 3 micros. 3 micros to the top side, guys. Want to see it rip and run on me. Want to see it continue this run. If it's going to run, I want to see it run, guys. If it's going to run, I want to see it run, guys. So for a straddle play on this, it's a little bit more hard, complex, due to the fact of the trailing drawdown. Like, if it's going to run, I want to see it run, guys. I want to see it pick the pace up a lot more than that. I know 230s when JP speaks, but I know that this initial run can pop, and really pop. We're at those highs on S&P. I want to see it run. See that? See that trailing drawdown rule? Guys, coming back down. Ladies and gentlemen, flipping the script, guys. Is there any clear news, or are we still waiting? I would love to see it come back up if it's going to do it. Remember, I'm in on both sides here, guys. Anyone have the news? Did we just not raise interest rate hikes? Did we not raise them? Or did we raise them? Did we not raise them or did we raise them, guys? We're coming right back down. Anyone have any news on it? Anyone have any news on it? Starting to fall here. No, I think we're going to range, guys. I think we're going to range, guys. I don't think that was it yet. No. It's okay, though. There's our initial pop and drop. So now we're going to see. Now you can hold these for a little bit longer. I just want to see how this works out. See how we're coming into play on this one now? Well, that means 26 here. We're only down that much. You see that, guys? We're coming back into play. If we go back to the tops here, you're going to be down basically the equivalent. So if this thing rips and runs all the way back up, guys, you guys are good to go. It's the trailing drawdown that'll get you, though. Okay? You want to see this thing come all the way back up to the top here of 429.4. It's 27. You want to see 26. 26, I want to see this thing go red. I want to see this thing basically pop and rip and run. But I don't know if this initial news is going to do it. Maybe we just did not raise. Anyone have the info? Hold on, let me go over to... Let's see Dex Lobby. Let's see if anyone said it in Dex. Unchanged. Yup, unchanged. Okay. Yup, unchanged. Unchanged, guys. Okay, but then we got a little bit of a pop. So, rates unchanged. Okay. So, what do I want to do here now? Okay, yup, this is what I wanted. I want to see this rip and run if it's going to happen. Like, just do it, bro. Just do it. Just hit me with it. We're already in the range, so I can hold both of them now that we're in this range. Because I have that stop loss, guys. I will cut out this little micro. Down 32 bucks on it. Oops. Unless we're just going to range. So not a big enough move, ladies and gentlemen. That's all that means. Not a big enough move. Oh my goodness, ladies and gentlemen. Look at that. Wow. YB, why are you holding? YB, why are you holding? Because I already have my range. In between these 2 points, no break even or stop loss is hit. I'm up 1,000 up here. I'm up like 800-900 down here. Guys, I need to push through it. If I need to hold till 230, I can hold till 230. As long as we stay in between the range, guys. I just want to move. Like I said beforehand, guys, I could give 2 craps which way it moves. Rates unchanged. I could give 2 craps which way it moves, guys. See, these are my longs now coming back up. I'd rather the long spike, to be honest, come back up and get in. Why? Because, well, it already spiked up. That's that initial pop. That's them basically being like, hooray! We're being unchanged. That's basically that. It's just like, yeah. That's all that was. Now into a little bit of consolidation. Yeah, guys, maybe the time of 2:30 when the meeting started. I was really banking on the fact that this news was going to come out and really affect it. That's not a big enough move for me, guys. I'm sorry, man. If I would have traded NQ, maybe so. I should have taken larger size, though. Looked for a smaller move, larger size, guys. That would have did it. Coming up to here on 10 micros. I mean, excuse me, 10 ES minis. Dude, you're freaking printing. But like undecided. Right, yup. Because it is right now. The market doesn't know really how to react in a way. I'm thinking about loading up on 10 to both sides, guys. Again. Load up to like 7 more contracts on this side, 7 more on the other. But then if we range, then I'm screwed. Yeah. Yeah, I don't think it's really going to have a move till 2:30, guys. I just don't know. I don't think that was a big enough move, guys. I think we're going to have a move, but I just don't think it's going to hit yet. I'm going to be honest, ladies and gentlemen. I think when JP starts to speak, like, look, we're right at my break-even price, guys. We're right back to my break-even price. We had that big move. Now we're back to my break-even. Went up to 421. We're in like that dollar range of 420 to 421, guys. No crazy movement here. Nothing. Nothing here. Yeah, nothing, guys. Nothing. I was waiting till 2 p.m. Why did I wait till 2 p.m.? I was expecting a move. I was expecting a pop. A nice big pop, rip and run. A nice big drop, sell-off. I was not expecting, hey, thank you. You know what I mean? I was not expecting, this is good. Thank you for the news. Okay, cool. Right back into our chop. Right back into our chop. Our consolidation, guys. This is really chop. So I do think we might get a little bit of a breakout to one of the ways, one of the directions here. But we usually have a bigger move than this, guys. I'm not going to lie, guys. I'm not going to lie. We have a bigger move than this, ladies and gentlemen. Like, this is random. This is really wild that this is the move. Like, I want to see a pop back up to 421 and break, man. I want to see a pop up to 422. I want to see a pop up to 4245 on ES, 4250 on ES. You know what I mean? I don't want to see this bullcrap chop right now. I want to see a drop down to 418. I want to see a drop down to 4210. You know, I don't want to see chop for the next fucking 30 minutes. Yeah, ladies and gentlemen, not much of a move, man. I don't think, you know, I don't know, man. I'm not seeing too much. I was expecting a big pop or a big drop, guys. I thought 3 contracts was definitely going to be enough. Now I know to load up with around 10, guys. Now I know to load up with around 20. Hey, I can pass the account by as much as I need to pass it by. If I'm passing it by, you know, 3,000, 4,000, 5,000, I don't care. That's fine. That's fine by me, bro. Like, let it range, I guess, now. So, yeah, buddy. FOMC, let's go. Yeah, buddy. Yep, so we're just making lower high, guys. Lower highs are just coming in, guys. That's it. I want to see this thing dump a Ruski here, guys. I was just straddling both ways. Nothing. Like, I'm up like 200 bucks here. There it goes, guys. Potentially hit me with it, bro. Hit me with it to the downside, bro. Hit me with it to the downside, bro. Guys, if one account stops out, I'm gonna have to sell the other one immediately, just because it's too much risk. You're risking losing both of them. Look at it. It's I don't know, man. I don't know, man. I don't know, man. It's just gonna range, guys. Just gonna range for the next 30 minutes. What time is it? Already 11. We might just be able to hold this until frickin' the meeting. Like, unless we break down to the trend line here. That's all I see. Anyone print on that? Anyone make money? Or is everyone kind of like the same as me? Like, okay, that was an alright pop and drop, but nothing crazy. Anyone print? Anyone print big? Anyone print massive on that move? Anyone take your profits? Guys, right now you asked me if it's going to go up or down. I couldn't really tell you, man. I mean, it's not really in the... This is doing what it did all day. It looks like it wants to pop a little bit here, but now it looks like it wants to drop. Like, ranging, bro. That's all we're doing again. I should have waited till 2:30 to pull the trigger. Did not wait. Thought this move would be bigger. That's it. Just thought this move would be bigger. I'm not even in. Right. Smart. Smart. Wait till 2:30. Smart move. Honestly. Right, bro. So that really wasn't a big enough move, guys. That wasn't a big enough move to really print unless you were in heavy. So if I would have went in with 10 contracts, I definitely would have taken my gains. That would have been essentially, what is this, 431 to 430. Every move on 10 contracts, every $1 move, instead of being $100, would be $1,000, right? So going from the low here of 30 up to 39 would have been $9,000 on longs, right? So yes, I would have definitely printed and been able to take that profit. I don't know why I just didn't do that. I just went in too small, guys. That's dumb of me. I went in too small. I should have went in way larger than I did. Way larger than I did, guys. Way larger. I'm talking massively larger. Like 7 more contracts. So I should have went in with 7 contracts to either side. Or no, 10 contracts, excuse me. Because I would have immediately passed. Immediately dumped, immediately failed one, immediately passed the other. That's the game plan, right? Well, then why wait? Why get less contracts if you know that that's it? That was my own fault. I'm working on it. We're going to work on that. So next FOMC meeting, if we're going to continue to raise rates or something like that, yeah. Yeah, to satisfy everyone, though, honestly, for it to come out as expected, I'm not really that surprised due to the fact that they, like, JP has to satisfy everyone. You have to, like, you know, the people that are trying to buy houses, trying to get loans, you know, they're mad right now because of these interest rate hikes. Okay, hey, well, they also have to pay for oh, they don't care with that. No, dude, to satisfy everything, to make everything okay. Obviously, bank owners and stuff are upset, you know. But then, okay, let's say you take away 0.25. Well, now inflation's going to get higher. It's like, what do I do? It's like, just pause it. It's like I feel like they're just prolonging the inevitable. Like, I just don't think they know what to do. Like, they're just like, I just don't know what to do, guys. They're like, I don't know what to do. We're screwed, guys. They're like, we're screwed, guys. How much am I up on this one? Like, just dump. Just dump, S&P. Sell off. Dump. Die. Die, S&P. S&P starting to die off. We back, YB. What is up, Ryan? I'm in 2 accounts. Don't worry, buddy. I know you're seeing this right now. Like, YB, doesn't look like you're doing too well. Don't worry. My other account's up just as much. Yes, please sell off. I'm waiting. The news was not big enough. The news was not big enough. I got in too little. The news was not big enough. I'm up 700 on this one, but down 900 on this one because of my entry. Look at that, look at that, look at that.
Order filled.
Gonna get out of this one. Up 1,000 on this one. About to get out of this one, guys. Let's see it dump, guys. Let's see it dump, ladies and gentlemen. Let's see it sell off, guys. Hit me with it, S&P. Hit me with the sell off. You're underneath your auto trend line, guys. Hold it. Hold it, hold it, hold underneath, hold underneath. Yes, green or red. Yes, green or red, bro. Sellers, come in, take it away. Do it, sellers. Come on, baby. I'm about to have to just take it.
Order
Yeah,
filled.
I'm gonna have to take it, guys. 2,200 on this one. Why, YB? I'm waiting till 230 then, guys. Now I got that wiggle room, and I still have this account right here, which also has room. 2,000. This one has about 2,000 as well. This one has about 200. So the game plan for this one, bro, I'm gonna load up. Oh, shorted and long, yes sir. So made like 800 on one, but the trailing drawdown's the issue, guys. The trailing drawdown. So I got a game plan here, guys. I'm gonna go long on this one. I don't know, because I don't know, when JP speaks, I think the market's gonna go up. I think the market's gonna spike. So I almost just want to go long on this one down here. Yes, this one down here, because I have a $2,200 range, right? I kind of, you know, whichever one has more range. So it's like, now I have 350K accounts. What do I want to do? I'm gonna wait, guys. My hands are off the table, guys. I'm gonna wait, guys. There was no, I just couldn't keep holding it. So my hands are off the table now, guys. Except for this one ES Micro. Oh, this one ES Micro, baby, gonna print, dude. If we spike to the downside, guys. You guys already know, baby. Some of you guys are like, what? There you go, YB. Might look for Q puts off this shelf crack. Right. Right. You just got to watch out a little bit, man. What I would say is I'm waiting till 2:30. We got less than 15 minutes. We got technically 12 minutes here, right? So I'm just going to wait for JP to speak. Let me load him up here also on YouTube. Hey, what's up, Tebow? What's up, YB? That rate decision was very anticlimactic. Yeah, bro. Very anticlimactic. That rate decision was... It was garbage. Let's just go with that. It was terrible. It was terrible. I was not expecting it to be so bad. Okay. Let's go to JP speaking today. No, like, it was more or less just like, we'll watch from CNBC. It was just like, right? It was just like, yay. No, okay, no, man. Hesitating because of him talking too. Right. I would wait. I'm gonna wait for him to talk, and I'll see what he says. So I made 800. Made 800. Made 800 down to 48 on this one, but this one right here, guys. I don't know, with the $200 trailing stop. You know, we're gonna see what I want to do with it. You know, yeah, I don't know what I really want to do with it. I might go big or go home on it, man. I might just use it while momentum is building. So, like, I might go long and short. Like, I might just go long on this account as well. I'm 1,300 off or something. Something like that. Yeah, 1,300 off. So if I catch the right direction, make $1,300, bink, lock that up real quick. Sell the other one really quick. Maybe go long on that one, bink, catch the move on that one. Then maybe on this one right here, we do the same thing. Now I have 350K funded. Just because I caught the right move on 3 different accounts. You know what I mean? Like, I just gotta wait for him to talk, man. Hey, what's up, Jim? Jim's saying waiting till that Q&A. Yes, I'm with you, buddy. They're gonna hammer this guy, bro. They're gonna hammer this guy. I might take a long while he's giving his opening remarks, because the market, when JP starts to speak, literally 9 times out of 10, the market starts to spike up. Literally, you know, I mean, it just always happens. We have 9 minutes left, guys. And if any of them damn activists run up in there, bro, one more time, dude, all right? I know I was saying, oh, yeah, let them run up in here, it'll be funny. No, it's not funny, all right? So, none of them damn activists run up in there, man. So, chilling out, guys, chilling out. So, yeah, man, so I'm just waiting. I'm just waiting until that. I definitely recommend all of you guys wait as well, yes. I gotta play this very technical, very smart. I don't know how I want to play this. I will say, this account right here, we're waiting. This is just one micro to the downside, guys. But I'm trying to see how I want to play this. I'm trying to think. How do I want to play this here? How do I want to play this right now? Okay. Here's what we're gonna do, guys. Here's what I'm gonna do. 2:30 hits, guys. When he starts to speak, I'm gonna go long on one of the accounts. Do I know which one yet? I'm gonna figure that out. I'm gonna go long while he's speaking. Now, giving his opening remarks, saying that he paused interest rate hikes, I assume he's gonna pump this market up a little bit. Bro, just shopping right now. Right, I got out of my position. I'm out of my positions. Except for this one right here, which is on MES. Yeah, I'll bring this up. It's like 12:50. We're good. I'm gonna wait. I'm gonna wait until he speaks. And then I'm really gonna wait. I'm gonna wait for the Q&A, like Jim said over on YouTube. I'm with him. The Q&A is really when they're gonna hammer him with questions that he's might be prepared for, might not be prepared for. So then I can play based off what he says. Yes, and we usually print. Like last time we had an FOMC meeting, I printed $400 on micros, which would have been the equivalent on my personal funded, which would have been the equivalent of 4,000 on minis. So yes, we're gonna wait. Okay, game plan in set, guys. We got 7 minutes, guys. In this next 7 minutes, ladies and gentlemen, I'm gonna go take a piss. Woo! Well, I still have a couple seconds or a couple minutes here, guys. I'm gonna take a piss. All right, guys, let's turn the music up. From Paris to Berlin. I'll be right back, guys. Hold your horses, sit on your hands. We got 7 minutes till this party starts. I'm gonna bring this pretty man's face up. Woo! Alright, guys. Alright, ladies and gentlemen. Let's get into it, baby. There we go. Okay, guys, so we got 4 minutes until this thing goes live. Let's see, what are we doing here? Chop City, Chop City, Chop City. Yep. Kind of what I expected. I don't expect to move, like I said, guys, till 2:30. Don't judge me. YB, how many cigars you just smoked? Listen. Listen. This is the same one. Listen. This is the same one, guys. Judge it.
Didn't think you wanted me, cause you thought I'd come for free. Now you be on my floor, sitting right outside my door. Begging, I'll get you begging for me to leave her. Begging,
Woo.
I'll get
So, I hope you guys are all ready, baby. Hope you guys are all ready, baby. Who here is waiting with me? Who here is like 2:30, baby? In the next 4.5 minutes, we're gonna punch it in. Next 3 minutes, we're gonna punch it in. We're gonna get a good trade in. We're gonna get it in, baby. Yeah, buddy. This has my head going. This motherfucker, I've been waiting all day, baby. He says, I've been here since 9 a.m., bro. He's like, you don't want to know the things I've had to do in the meantime to keep myself occupied. He's like, you want to know the things I've had to do? YB? Yes, I'm ready. He's like, so, buddy's been going in. I got you, Ryan. One? Camus, what do you mean? You ready? You ready? All right. I had to find my mouse and call my broker to let me back. Yeah, buddy. Yeah, buddy. He said, yo, I'm not playing. I know it's not 1:30 yet. Let me in the account. Yeah, I know I said 1:30. I don't care. He's like, oh, Ryan, you're a funny guy. Look at the longs now. Guys, I kind of expect a pop coming into the market, coming into the meeting. So, I hope you guys are loving this. You ready, baby? We got 1:30, guys. Woo! Send your prayers through. Send your prayers through, ladies and gentlemen, to make it a good FOMC meeting, baby. Guys, if I would have just held... No, never mind. I would only be up $300. 35. I thought I would have been up 3,000. My bad. Alright, guys, here we go. Alright, let's turn it down. Let's pause it. Guys, how long do you think until he comes out? He runs on what I call Puerto Rican time. So there's something called Puerto Rican time. Is us Puerto Ricans, we usually show up about 30 minutes to an hour late to everything. So if you say 1 o'clock, we'll be there at 1:30. You say 1:30, we'll be there around 2. Now around 2 o'clock is when we get a little bit more crazy, right? So you say 2, now we're going to show up at like 2, maybe 2:50, 4 o'clock, you know? So that's something called Puerto Rican time. Yep, so he runs directly on that. You know, is he Puerto Rican? I don't know. It doesn't look like it, but yes, he does indeed run on that. Sometimes he's a bit late. So yes, some of you Puerto Ricans can also admit this. You know, don't be like, YB, you wouldn't know. No, that's literally, that's the truth. Every single Puerto Rican can admit this. Okay, so 2:30. When do you think it's actually gonna start? I'm thinking he's not gonna hit the stage until like, I don't even know, bro. I'm thinking like 215, 220. All right, guys. So got the brokerage up here, guys. Ladies and gentlemen, I might flip the script here, guys. I might sell here, and maybe go long if we get back down to like 420.20, because I do think it's gonna spike.
Order filled.
That's not what I meant to do.
Order filled.
Okay. All right. So here we go, guys. I do think we're gonna spike. I do think we're gonna spike. Okay. How do I want to do this? How do I want to do this? Oh crap. Choose your judge. Okay. All right. Just like that does. Oh shit. You guys can't see some of my big head. You can't see some of my big head. Oh shit. That would have been. Fuck. It's okay. Here, let's do this. Oh my goodness, he's here. He's here. Buy calls.
Order filled.
Buy calls. I did on this account, guys. All right, that's it. Oh shit. I'll shut up.
My colleagues and I remain squarely focused on our
He
dual
just got
mandate
straight
to
into it.
promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we
Order
remain
filled.
strongly committed to bringing
Spike.
inflation back
Nice.
down to our
This is
2%
on that one
goal.
account, guys. That was what a
Price
beauty.
stability is the
Oh my goodness, what a
responsibility of
beauty.
the Federal Reserve.
Wow.
Without price stability, the economy does not work for anyone.
Stay up there.
In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all.
This is on the
Since
one that had a
early
tiny
last
wiggle
year,
room, guys.
the
That's why I got
FOMC
in.
has
That's it.
significantly tightened the stance
I'm
of
waiting for the
monetary
Q&A on my
policy.
other two accounts.
We have raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. The stance of policy is restrictive,
I wanna see
meaning
that red to
tight
green. Nice,
policy is
nice.
putting downward
Yup.
pressure on economic activity and inflation, and the full effects of our tightening have yet to be felt.
Nice.
Today, we decided to leave our policy interest rate unchanged
Nice.
and to continue to reduce our securities holdings.
Nice.
Given how far we have come, along with the uncertainties and risks we face,
Nice. That
the
should
committee
spike
is
it.
proceeding carefully. We will make decisions about the extent of additional policy firming and how long policy will remain restrictive based on the totality of the incoming data, the evolving outlook, and the balance of risks. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a strong pace and well above earlier
Nice.
expectations. In the third quarter, real GDP is estimated to have risen an outsized annual
Nice.
rate of
Nice.
4.9%,
Yes.
boosted by a surge in consumer spending.
Spiking past all auto trend lines,
After
guys.
picking
Wanna
up
see it hold.
somewhat over the summer, activity in the housing sector has flattened out and remains well below levels of a year ago, largely reflecting higher mortgage rates. Higher interest rates also appear to be weighing on business fixed investment. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 266,000 jobs per month, a strong pace that is nevertheless below that seen earlier in the year. The unemployment rate remains low at 3.8%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up since late last year, particularly for individuals aged 25 to 54 years,
Not me.
and immigration has rebounded to pre-pandemic levels. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. Although the jobs-to-workers gap has narrowed, labor demand still exceeds the supply of available workers.
He stuttered. It might go down.
Inflation remains well above our longer-run goal of 2%. Total
Keep talking.
PCE prices rose 3.4% over the 12 months ending in September.
Keep talking.
Excluding the volatile food and energy categories, core PCE prices rose.
Order filled.
I'm gonna take it because I got $500 wiggle room now, guys.
Inflation has moderated.
That's why
since the
I'm just
middle of
watching
last
the wiggle
year.
room, guys.
Readings
I'm gonna
over
take
the
it.
summer were quite favorable, but a few months.
I
of
just
good
wanted that
data
wiggle
are
room
only
now.
The beginning of what it will take to build confidence that inflation is.
It's gonna
moving
keep
down
going now.
Sustainably toward our goal. The process of
I'm waiting
getting
for the
inflation
Q&A now.
sustainably down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of
He's
households,
wearing a black suit.
businesses, and
That's not good,
forecasters,
guys.
as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely
it's gonna go
aware
here, guys.
that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of
I hope you guys aren't on calls,
food,
bro.
housing, and transportation.
Take some profit. Take some profit.
We are
Take some
highly
profit.
attentive to the risks that high inflation
Take some
poses
profit.
to both sides of our mandate. and
Don't
we are
hold. Don't be
strongly
greedy.
committed to
Take some
returning
profit. I hope you guys
inflation
took
to our
profit.
2%
I hope you
objective.
guys took profit.
As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points, and we have decreased our securities holdings by more than $1 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings.
Yes, sir. Yes, sir.
We
Yes,
are
sir.
committed to achieving a stance of monetary
Near the
policy
top.
that is sufficiently
Near
restrictive
the top, like right around
to
here.
bring inflation sustainably down to 2% over time,
Got in down here, right
and
around
to
there.
keeping policy restrictive
And on this account
until
too.
we are confident that inflation is on a path to that objective. We are attentive to recent data showing the resilience of economic growth and demand for labor. Evidence of growth persistently above potential, or
I want the
tightness
Q&As
in
to
the
come
labor
in.
market is no longer easing,
Q&As, baby.
could put further progress on inflation at risk and could warrant further tightening of monetary policy. Financial conditions have tightened significantly in recent months, driven by higher, longer-term bond yields, among other factors.
Right back up, bro.
Because persistent changes in financial conditions can have implications
I might just risk
for
this
the path
account.
of monetary policy.
I don't want to. Wait, whoa,
We
wrong
monitor
account.
financial
Whoa, that would have been
developments
bad.
closely. In light of the uncertainties and risks and how far we have come, the committee is proceeding
$500
carefully.
wiggle room.
We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook and for economic activity and inflation, as well as the balance of risks. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We remain committed to bringing inflation
He looks
back
so
down
unhappy
to our
right now.
2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below
Looks
potential
like he had a
growth
gun to his head.
and some softening of labor market conditions.
Say it!
Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run.
Say what we told you!
To conclude, we understand that our actions affect communities, families, and businesses across the country.
Damn.
Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum
Coming
employment
off of this
and
top now,
price
guys.
stability goals. Thank you, and I look forward to your questions.
Coming off of this high now, guys.
Howard Schneider with Reuters. Thank you, Chair Powell, for doing this. To what you
Order
referenced
filled.
the rise in long-term bond yields, to what degree did that supplant action by the
man.
Fed at this meeting?
Thanks for your
Nice.
question.
Nice. Amazing.
So-
Stay down there! Stay down there!
Bond yields, but I want to take a second and just sort of set the broader context in which we're looking at that. So if you look at the situation, let's look at the economy first.
Stay down there, stay down there.
Inflation
stay
has
down
been
there,
coming
stay down
down,
there.
but it's still running well above our 2% target. The labor market has been rebalancing, but it's still very tight by many measures. GDP growth has been strong, although many forecasters are forecasting, and they have been forecasting, that it will slow.
Nice.
As for the committee, we are committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation down to 2% over time. And we're not confident yet that we have achieved such a stance. So
Come on,
that is
baby.
the broader
Dump.
context in
Dump 'cause of
which
that.
the strong economy and all the things I said, that's the context in which we're looking at this question of rates. So obviously we're monitoring, we're attentive to the increase in longer-term yields, and which have contributed to a tightening of broader financial conditions since the summer. As I mentioned, persistent changes in broader financial conditions can have implications for the path of monetary policy In this case, the tighter financial conditions we're seeing from higher long-term rates, but also from other sources like the stronger dollar and lower equity prices could matter for future rate decisions as long as two conditions are satisfied. The first is that the tighter conditions would need to be persistent, and that is something that remains to be seen. But that's critical. Things are fluctuating back and forth. That's not what we're looking for. With financial conditions, we're looking for persistent changes that are material. The second thing is that the longer-term rates that have moved up, they can't simply be a reflection of expected policy moves from us. That we would then, if we didn't follow through on them, then the rates would come back down. So, and I would say on that, it does not appear that an expectation of higher near-term policy rates is causing the increase in longer-term rates. So, in the meantime, though, perhaps the most important thing is that these higher Treasury yields are showing through to higher
Ricky,
borrowing
going to, and this
households
happened a
and
couple minutes ago.
And those higher costs are going
to. Oh, is it delayed? Oh, crap. Okay.
To the extent this tightening persists.
Okay. You want to send the link, Ryan? Ryan, you want to send the link?
8%, near 8% mortgage rate, which could have pretty significant effect on housing. So that's how I would answer your question.
Just as a quick follow-on to be
Order filled.
In your opening statement and just now, you seem to imply that you are not yet confident.
Order filled.
Financial conditions.
I'm holding one right now, guys. Holding one.
Finish the fight. Is that true?
Yes, that's exactly right. To say it a different way,
getting this thing back up is a goal. Okay.
Future meetings.
Wait, is CNBC not
We have not made
active?
a determination, and we're not. I will say that we're not confident at this time that we've reached such a stance. We're not confident.
I've got
that we have.
this
We're not
fucking
confident
guy,
that we
dude.
have. And that is.
He's like, I didn't
the
get
way we're
premium.
Going into these future meetings is to be, just determining the extent of any additional further.
Like, why be? Hold on.
Tightening that may be appropriate to return inflation to 2% over time.
Dude, look at that. Look at that sell-off, guys. Look at that sell-off. Getting this thing all the way back up. That's beautiful. That's what we want. That's what we want, guys. You know why we want that?
Thank you so much for taking
Ladies and gentlemen, if I can get this back to 2,000, I can go long and short one and catch both sides. This is awesome. Look at this. Getting this thing back up, this is awesome.
Their peak, or is there a possibility of restarting rate increases next year? And are there any costs to taking a more extended pause?
Okay. Let's see this.
So, we didn't talk about making a decision. We haven't made a decision today. About September. Really, it was a decision for this meeting there. But we're going into this summer meeting. We'll get, as you know, 2 more inflation readings, 2 more labor market readings.
Nick Timros of the Wall
some
Street
data
Journal.
on
Chair
on
Powell, did the Fed
economic
staff
activity.
put a recession back
And
in?
so we'll be taking, and also the broader situation, the broader financial conditions.
And how much
and broader
does
world
this
situation. We'll be
tightening
looking
in
at all those
financial
things as we make a
conditions
decision
substitute for
in
rate
December.
hikes
We
if
haven't
Order
made that
filled.
the
decision.
tightening is persistent?
Guys,
They would
nice.
said
Got
it
the
was
thing
worth
back up to
maybe a
1,200. That's what I
point
like.
The
when
idea
we
that
had
if
the
you-
bank
the idea
failures
that
in
you
the
would
spring.
be
What is-
difficult to raise again after stopping for a meeting or two. It's just not right. I mean, the committee will always do what it thinks is appropriate at the time.
Is it delayed?
And again, we haven't made any decisions at all about December. We didn't even. I have to answer it since we did publicly say in the minutes. You'll know anyway in the minutes. The staff did not put our session back in. I mean, it would be hard to see how you would do that if you look at the activity we've seen recently,
Chair
which
Powell,
is
did
not
the Fed
really
staff put
indicative
a
of a
Yep.
recession.
This
in the
one's the
near
new
term.
one. Thank you,
In
Ryan. I
terms
appreciate
of
that a lot.
how to think about
Saved us
translation
all money
into
right there.
Rate hikes, I think
Thank you, Ryan.
it's just too early to be doing that. And the main reason is we just don't know how persistent this will be. You can see how volatile it is. Different kinds of news will
I'm gonna give
affect
you
the
$1
level of
later.
rates. And I
I'm gonna
think
cash up you
any
$1
kind of
for
an
that. I got
estimate
you,
that
buddy.
was, precise would hang out there and have a great chance of looking wrong very quickly.
I got you, buddy.
I think what we can say is that financial conditions have clearly tightened, and you can see that in the rates that consumers and households and businesses are paying now. And over time, that will have an effect. We just don't know how persistent it's going to be, and it's tough to try to translate that in a way that I'd be comfortable communicating into how many rate hikes that is.
Okay.
I guess what makes you confident that tighter? What makes you confident that tighter financial conditions will slow above trend growth when 500 basis points of rate hikes, QT, and a minor banking crisis have not thus far?
Well, that's the way our policy works.
He's like, well, shit.
Sometimes it works with lags, of course, which can be long and variable. But ultimately, if you raise raise interest rates, you do see those effects, and you see those effects in the economy now. You see what's happening in the housing market. You're seeing
Order filled.
You'll see If you look at surveys of people, it's not a good time, they think, to buy durable goods of various kinds because rates are so high now. I mentioned again, we're getting reports from housing that the effects of this could be quite significant. But you're right. This has been a resilient economy, and it's, I think, been surprising in its resilience. And there are a number of possible reasons why that may be. Our job is to achieve maximum employment and price stability, and so we take the economy as it comes. It has been resilient, so we just we take it as it is.
Thank you. Colby Smith with the Financial Times. In terms of the thresholds that you've laid out of what could warrant further tightening, the additional evidence of persistently above trend growth or some kind of reversal in the recent easing of labor market tightness, that seems to suggest something more powerful than just one more quarter point rate hike would be necessary. And I'm just curious if that's how the committee sees it.
So we've identified those factors. Those are not meant to be the only factors or a specific test that we're going to be applying with some metrics behind it. Really, we're going to be looking at the broader picture, and what's happening with our progress toward the 2% inflation goal. Is the labor market continuing to broadly cool off and achieve a better balance? We'll be looking at that. Growth. We look at growth insofar as it has implications for our 2 mandate goals. We look at that. And we look at broader financial conditions. So we'll be looking at all of those things as we reach a judgment, whether we need to further tighten policy. And if we do reach that judgment, then we will further tighten policy.
Okay. And just in terms of the tightening of financial conditions, if that is having some kind of offsetting effect in terms of the need to potentially, again, raise rates, what then is the potential impact on the trajectory of rate cuts? Could we see those maybe pulled forward or have to see more than what the September SEP indicated?
So the fact is the committee is not thinking about rate cuts right now at all. We're not talking about rate cuts. We're still very focused on the first question, which is have we achieved a stance of monetary policy that's sufficiently restrictive to bring inflation down to 2% over time, sustainably? That is the question we're focusing on. The next question, as you know, will be for how long will we remain restrictive? Will policy remain restrictive? And what we said there is that we'll keep policy restrictive until we're confident that inflation is on a sustainable path down to 2%. That'll be the next question. But honestly, right now, we're really tightly focused on the first question. The question of rates cuts just doesn't come up because I think it's so important to get that first question, as close to right as you can.
I don't know. That was really bad.
Steve
info
Leisman,
right there
CNBC.
I think that's going to
Mr.
sell
Chairman,
off.
I guess I had assumed that there was a tightening bias in the committee. You say in the statement you're looking to assess the appropriate stance of monetary policy, the extent to which you may need to hike additionally. You didn't say earlier that you were sufficiently restrictive. There were forecasts for 2 rate hikes among most members of the committee. But then you just said that we haven't made a determination. Would you say the bias right now is neutral, that there is no disposition to hike again, and that the committee largely has moved off of this forecast for 2 hikes? Or for, sorry, 1 additional hike?
I think you're talking about 1 additional.
Yeah,
I wouldn't say that at all. I would say, the language, looking at it here, in determining the extent of additional policy firming that may be appropriate to return inflation 2% over time, that's the question we're asking.
So is it right to think of that as a hiking bias is still in the committee here?
We haven't used that term, but it's fair to say that's the question we're asking is should we hike more? It's not, and that is the question. And you're right that in September we wrote down 1 additional rate hike. Come on, baby. But, we'll write down another forecast, as you know, in December.
Chris.
Thank you.
Order filled.
Sold out of 2.
Press. Well, since the last meeting, the auto workers' strike has finished. Oil prices have leveled off. And yet, on the other hand, you have the outbreak of war between Israel and Hamas. How do you see all those factors taken together affecting the economy going forward? How are you thinking about those?
So there are significant issues out there. As you point out, global geopolitical tensions are certainly elevated, and that goes for the war in Ukraine.
Order filled.
War between Israel and Hamas. We're monitoring that. Our job is to monitor those things for their economic implications. So, the UAW strike, as you point out, is appears to be coming to an end. Oil prices have flattened out. They haven't gone down, but I guess they've gone down a little bit from their earlier peak. Another one is the possibility of government shutdown. We don't know about that one. So there's plenty of risk out there.
Sounds so bearish.
But I would go back to the bigger picture from our standpoint is we've got a very strong economy, strong labor market, making progress on the labor market, making progress on inflation, and we're very focused on getting confident that we have achieved a stance of
Order
monetary
filled.
policy that is sufficiently restrictive. That's really our focus.
Great.
I
And
thought
just
I was
one
in
quick
on-
thing. You last month had gone to York, Pennsylvania, where you talked to a lot of, last month, where you talked to a lot of small business owners. Just curious, what sentiments did you hear from them, or what did you picked up on, and was there anything that surprised you the most in terms of what they talked about?
I wouldn't say I was terribly surprised. I was very impressed by York as a town with a real strategy, and I would
That's
say
near
it's,
me.
It's very impressive what the people there have put together in the face of some difficult longer run trends about offshoring of manufacturing and that kind of thing. They've done a great job as a city, I think. What you hear and is consistent there, which is people are really suffering under high inflation. You were there. We talked to some people who, were feeling that in their businesses, and other people who were feeling it in their home lives as well. It's painful for people, particularly people who don't have a lot of extra financial resources, who are spending most of their income on the essentials of life. So we know that wasn't new, but that did come through very clearly in the conversations we had in New York. And I walked away from that even, just thinking that we really the best thing we can do for the U.S. is to restore price stability. Fully restore price stability and not fail in that task, and do it as quickly as possible, but also with the least damage we can.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. You've spoken before about the pain that would likely be coming for the economy in order to get inflation down. But since the economy has not responded to rate hikes in ways that would normally be expected, have you changed your views on that at all, on how necessary or inevitable that kind of pain would be, say, for the labor market or overall growth?
I need like a move, guys.
Well, I think everyone has been very gratified to see that we've been able to achieve pretty significant progress on inflation without seeing the kind of increase in unemployment that has been very typical of rate hiking cycles like this one. So that's a historically unusual and very welcome result. And the same is true of growth. We've been saying that we need to see below potential growth, and growth has been strong, but yet we're still seeing this. I still believe, and my colleagues, for the most part, I think still believe that it is likely to be true. It is still likely to be true, not a certainty, but likely that we will need to see some slower growth and some softening in the labor market conditions to get to fully restore
I'm about to just
price
go 10 on each side, guys.
So
this account and this account.
it's only a good thing that we haven't seen it, and I think we know why. Since we lifted off, we have understood that there are really two processes at work here. One of which is the unwinding
lowering
of
down that stop, bro.
distortions to both supply and demand from the pandemic and the response
Stop
to the
charting queen.
pandemic. And the other is restrictive monetary policy, which is moderating demand and giving the supply side
No, I
time
took it too early.
time
I
to
took it too
recover,
early,
time and
charting
space
queen.
to
It
recover.
worked.
So
I just took it too
You
early.
see those two forces now
It would have
working
worked
together
100%. I just did
to
it
bring
too
down
early.
inflation.
I did it back here
But it's that
when I should have done
first
it.
one
When he started
can
talking.
bring down inflation
at 30.
without
Like
the
I should have
need
done it
for
right
higher
here.
unemployment
Like a
or
minute
slower
before
growth.
here,
It's
Bink
just-
would have printed.
It's supply side improvements like shortages and bottlenecks and that kind of thing going away. It's getting a significant increase in the size of the labor market now, both from labor force participation and from immigration. That's a big supply side.
Yeah, buddy.
Gain that is really helping the economy. It's part of why GDP is so high, is because we're getting that supply. So we welcome that, but I think those things will run their course, and we're probably still going to be left. We think, and I think, we'll still be left with some ground to cover to get back to full price stability, and that's where monetary policy and what we do with demand is still going to be important.
Champagne popping,
Against
bro.
that backdrop, if you've gotten any clarity on lags, if you have an
Yeah,
economy
buddy,
that's been
good
so
stuff,
resilient to
charting
high
queen.
rate increases, does that suggest to you that there isn't necessarily this huge wave of tightening that's still coming through the pipeline and that it may have already come into effect?
You know, I continue to think it's very hard to say. So it's been 1 year at this meeting. 1 year ago, this was the fourth of our 75 basis points hikes. So that's a full year since then. I think we are seeing the effects of all the hiking we did last year, and this year we're seeing it. It's very hard to know exactly what that might be. But you can, for example, an example of where you wouldn't have felt this yet is debt that had been termed out. But it's going to come due and have to get rolled over next year or the year after. So, and there are little things like that where the effects are just taking time to get into the economy. So I don't, I think we have to make monetary policy under great uncertainty about how long the lags are. I think trying to make get a clear answer and say, oh, I'm just going to assume this is really not a good way to do it. And this is one of the reasons why we have slowed the process down this year, was to give monetary policy time to get into the economy. And it takes time, we know that, and you can't rush it. So slowing down is giving us, I think, a better sense of how much more we need to do if we need to do more.
Order filled.
Boom, baby! Passed on that hoe!
Michael McKee from
Boom, baby!
Television and Radio. I'm trying to connect the dots here. One quick clarification I want to ask about Rachel's question is, you said you need slower growth. You had always said before a period of lower than trend growth. Has that changed? And two, it sounds to me like you're basically saying here that the dot plots out the window, that every meeting is live with the possibility of a rate increase for right now. It doesn't matter about the turn of the year, and that there's not an objective way to determine whether or not you've got enough tightening in the system. It's just going to be a subjective judgment meeting by meeting.
Well, so let's talk about the dot plot first. So the dot plot is a picture in time of what the people in the committee thinks is likely to be appropriate monetary policy in light of their own personal economic
We got two more,
forecast.
guys. We got two more.
In principle,
we got two
when
more
things
to pass.
change,
Two more to pass.
That's not like a plan that anybody's
We got two
agreed
more.
to or that we will do. That's a forecast that would change. For example, I mean, many things could change that would cause people to say, I wouldn't write down that dot, 6 weeks later. Think of the number of things that could change your mind on that. So I think the efficacy of the dot plot probably decays over the 3-month period between that meeting and the next meeting. But nonetheless, it's out there, and we do personally update our forecast, but we don't formally update the dot plot. So, I think we try to be as transparent as we can about the way we're thinking about these things. We're laying out there our thinking, and as we approach the meeting, we'll all be, my colleagues and I will be talking about how we're processing that data. In terms of, we're not really changing the way, in terms of growth, what I said was below potential. So what you have here recently is growth that is temporarily, potential growth is elevated for a year or two right now over its trend level. So the right way to think about it is what's potential growth this year. People think trend growth over a long period of time is a little bit less than 2%, or I would say just around 2%. But what we've had is with the improvement in the size of the labor force, as I mentioned, through both participation and immigration, and with the better functioning in the labor market, and with the unwinding of the supply chain and shortages and those kinds of things, you're seeing actually elevated potential growth. There's catch-up growth that can happen in potential, and that means that if you could be growing at 2% this year and still be growing below the increase in the potential output of the economy. I hope that's clear. That's really what's going on. That's why I would say it as below potential.
But if you could clarify what I asked about meeting by meeting, are we essentially now supposed to assume that it's a meeting by meeting, live meeting with a chance of a rate increase that will be decided on
charting queen
criteria rather
Give me a
than
second, though.
objective at each meeting?
I don't know that I want to just accept anybody's characterization of it. I'll tell you how we're doing this. So we're going meeting by meeting. We're asking ourselves whether we've achieved a stance of policy that is sufficiently restrictive. to bring inflation down to 2% over time. That's the question we're asking. We're looking at the full range of economic data, including financial conditions and all of those things that we look at. And then we've come very far with this rate hiking cycle, very far. And you saw the spread at the September meeting of, it's a relatively small spread of people think 1 or 2 additional hikes. So you're close to the end of the cycle. That was an impression a belief as of September. It's not a promise or a plan of the future. And so we're going into these meetings one by one. We're looking at the data. As I mentioned, we're also, we're being careful. We're proceeding carefully because we can proceed carefully at this time. Monetary policy is restrictive. We see its effects, particularly in interest-sensitive spending and other channels. So that's how I think about it.
Damn!
Thanks. Hi, Chair Powell. Neil Irwin with Axios. In light of the run-up in long-term yields we've seen the last several weeks, have you given any consideration to the pace of your asset runoff program?
I need someone to say something bad and I'll catch the downside.
The higher term premium was endangering the dual mandate goals. Would that be reason to think about slowing or suspending QT, or should we think of that as more of a technical question around reserves?
So, committee is not considering changing the pace of balance sheet runoff. It's not something we're talking about or considering. And I know there are many candidate explanations for why rates have been going up, and QT is certainly on that list. It may be playing a relatively small effect, although I would say at $3.3 trillion in reserves, it's not. I think it's hard to make a case that reserves are even close to scarce at this point. So that's not something.
Back underneath 422, I'll be confident.
Victoria. Hi, Victoria Guido with Politico. I wanted to ask about the Basel III endgame capital proposal. You've gotten a lot of pushback from people on different aspects of the proposal, and you yourself expressed some reservations. And I'm just curious, could you accept finalizing that proposal without significant changes?
So that proposal is out for comment, and we expect a lot of comment. We won't get those comments until the end of, until well into next year. We've extended the deadline. And we'll take them seriously. We'll read them. I'll say what I do expect is that we will come
Breaking
to
auto trend line, guys.
consensus-driven
Same way we did here, though. We're gonna
we'll
whip.
come to a package that has broad support on the board.
So does broad support mean more support than the proposal had?
It means broad support.
Yo, this guy's a dickhead. Yo, this guy's a jackass today, guys.
Janelle Marte with Bloomberg. So, in addition to persistence, when you look at long-term treasury yields, what else are you watching to evaluate how those tighter financial conditions are hitting the economy, and if it will lessen the need for further tightening? Also, do you think that those higher yields could affect banking stress?
So what do we look at? We look at a very wide range of financial conditions. And in fact, as you'll know, different organizations publish different financial conditions indexes, which can have 7 or 8 variables, or they can have 100 variables. So there's a very rich environment, and we tend to look at a few of them. I'm not going to give you the names, but there are a few of the common ones that people look at, and so they're looking at things like the level of the dollar, the level of equity
just
prices,
printed, bro.
The level of rates, the credit
Deck just
spreads.
printed, bro.
Sometimes they're pulling in credit availability and things like that.
Did he really?
So it isn't any one thing. We would never look at, for example, long-term treasury rates in isolation, nor will we ignore them. But we would look at them as part of a broader picture, and they do play a role, of course, in many of the major standard financial condition indexes. Your second question was?
Yeah, let me know how much he's up.
Banking stress. So it's something we're watching. As you know, we did have, there were issues with interest rate risk and also, funding uninsured deposits in the things we went through in March and thereafter. And so we've been working a lot with financial institutions.
I want to see it back underneath 422. I want to see it make lower highs and then come underneath
good
422.
Good funding plans and that they have a plan for how to deal with the kind of portfolio unrealized losses that they have. We do think the banking system is quite resilient. We had a handful of bank failures, but so that's what we're out there doing, and we don't have any reason to think that these rate hikes are materially changing that picture, which is one of a strong banking system and one where there's a strong focus
I
by
need to see
banks
lower
and by
highs be made,
supervisors
guys.
on liquidity,
Like it needs a
on
pop, not
funding
be able to
and
break the
those sorts of
top,
things.
and come back down.
Thanks, Mr. Chairman. Scott Horsley from NPR. Last week, you and your colleagues put forward a proposal to lower the cap on debit card swipe fees for comment. Could you just talk a little about the considerations there, what it would mean for merchants, for banks, for consumers, and also just what y'all are seeing in terms of
422
the
dip by,
use
need to see
of
it pop back
both
up, not
debit
be able to
and
make
credit
new
cards
highs.
in the-
I'll
in
get
the
in then.
payment system?
You know, so you're right. We put a proposal out for comment is what we did, and you know this is a job that Congress assigned us, as you of course know, in Dodd-Frank, and all we can really do is faithfully implement the statute. That's all we're trying to do. What else can we really do? It's a 90-day comment period. We typically don't comment on these things once they're out for comment, and we do hope that stakeholders, and we know that they will use this opportunity
So
to
need to
express
see a little
their
bit of a
views. They haven't
pop
been
here.
shy about that.
Then need to
So
see it drop back
that's
down
critical,
underneath
and that's
422.
what I can say about that now.
Need to see lower highs. So here's our higher low, higher low, higher low,
Evan
lower
Lawrence
highs
with
now.
Fox Business. So over the last 3 months, the year-over-year PCE inflation was at 3.4%, core well over 3%. You've said in the past 2% remains the Federal Reserve target, but with no rate increase today, how long would you be okay then with a 3% or 3% plus overall inflation?
You know, the progress is probably going to come in lumps and be bumpy, but we're making progress. You know, I think the core PCE came down by almost 60 basis points in the third quarter. So if you, the best thing I could point to you to would be the September SEP, where you know the expectation was that inflation by the end of next year on a 12-month trailing basis would be well into the twos, and the year after that further into the twos. So that's if you look historically, that's sort of consistent with the way inflation comes down. It does take some time, and as you get as you get further and further from those highs, it may actually take
Order
a longer
filled.
time. But the good news is we're making progress, and monetary
Here we
policy
go, baby.
is
I'm in for a
restrictive,
spike
and
above now that
we
we're
feel
breaking.
Like we're
I
on
need
a
to see these
path,
hold. Want to see it hold.
to make more progress, and it's essential that we do.
You've said in the past that doing too little on interest rates could take years to fix, but the cost of doing too much could be easily fixed. How robust was the debate about this pause on the doing too little side?
That's always the question we're asking ourselves.
Double top, double top.
Order filled.
We
Double
know
top, double top, double
that
top.
If
Get
we,
out, get out,
if we
get out.
fail to restore price stability, the risk is that expectations of higher inflation get entrenched in the economy.
Up 228
and
small
we
account,
know that that's
342
really
daily.
bad for
Yeah,
people.
buddy.
Inflation
There we
will
go.
be
Bro is
both more
parenting, dude.
both higher and more volatile. That's a prescription for misery, and so we're really committed to not letting that happen. You know, for the first year or so of our tightening cycle, the risk was all on the side of not doing enough. We're
up on one
we've come
account,
far
Forbes.
enough
We're trying to get the
that
other two
risks
up.
are, you know,
Up
have
on
gotten
one,
more
trying to get the other
two-sided.
two up.
You can't identify that with a lot of precision, but it does feel like the risks are more two-sided now. But we're committed to getting inflation back down to our target over time, and we will.
Simon Rabinovich with The Economist. Quick follow-up to the question about banking stresses. You talked about how the banking system is resilient. Of course, part of the resilience of the past year stems from the bank term funding program that you launched in March. Given that bond prices have not
Starting to make higher
recovered,
lows, guys.
unrealized losses are probably mounting, how likely is it that you might have to extend that program in March next year?
Good question. We haven't really been thinking about that yet. You know, it's November 1, and that's a decision we'll be making in the first quarter of next year.
Great. Sorry, quick separate question about inflation expectations. The Michigan Sentiment Survey showed a big jump in 1 year ahead inflation expectations last month.
Triple top now, guys.
3.2 to 4.2. Last year, you said that particular survey was a really decisive factor in one of your rate hike decisions. If it stays elevated next time around, how big of an input will that be into your December thinking?
Yeah, we look at a range of things. I think the thing got blown out of proportion a little bit. It was actually a preliminary estimate that got revised away, and I said it was preliminary but that didn't get picked up. So we look at many things, and so really look across the broad array of surveys and also market-based estimates, and and we do that really carefully at every meeting and between meetings. And, it's just clear.
I got it
that
earlier than I would have, but
inflation
made 600. Was hoping for
expectations
1K.
are in a
Yeah,
good
buddy.
place. The public
There you
does
go,
believe
bro.
that inflation will get back down to 2%
Printer,
over
bro.
time, and it will.
JP?
They're right. So. And there's no real crack in that.
Order
JP,
filled.
armor.
Armor.
Let's see
You
it
can
to the
always
top
find
side, bro. We're
one
breaking out quad
reading
top here.
that
Want
is
to
a
see a
little bit
breakout
out
to
of
the top
whack.
side, guys.
But
That's it. Want
honestly,
to see a
the
rip and
bulk
run to
of
the
them
top
are
side?
Just very clear that the public believes that inflation will come down, and that's, of course, we believe that's critical in winning the battle.
There we go. There we go, ladies and gentlemen. There we go, ladies and gentlemen. That's what we're looking for. A pop here. A
Hi,
pop.
Chair Powell. Megan Casella
Nice.
with Barron's. Thanks for taking our questions.
Nice.
I wanted to see if you
Nice.
could talk about the neutral rate.
Yup.
You mentioned
Yup.
today that you're still debating whether rates are
Want to see this thing
sufficiently
pop now,
restrictive.
guys. Continue to
And
spike.
you've recently said
Continue
that,
to spike up.
evidence
Continue
is
to rip and
suggesting
run,
policy is
baby.
not too tight right
Come on,
now.
S&P.
So I was curious if you could elaborate on that at all and whether that means the neutral rate, in your view, has risen.
Yeah. So, first thing to say is that it's very important. It's a very important variable in the way we think about monetary
Red to green
policy,
here,
but
baby.
you can't identify it with any precision in real time, and we know that. So you have
Red
to
to green
just
here's
take
what I'm
that-
looking
You
at
have to
on
take your
S&P
estimate
500.
with a grain of salt. What we know now is, within a range of estimates of the neutral rate, policy is restrictive.
Come on, baby.
And it's therefore putting
Come on, baby
downward
girl.
pressure
Spike.
on economic activity, hiring, and inflation. So we do talk about this. There's not any debate
see a red to
or
green move here, guys.
attempt to sort of agree as a group.
Thank you, Active.
On
I
whether our
appreciate it,
stars
buddy.
moved or
Thank
not.
you,
Some
thank you,
people think
man.
it has, some
Here it
people
goes,
haven't
ladies and
said
gentlemen.
that
Red to
don't
green.
think
I
it
love
has.
it. I love it. I love it. I
Ultimately,
love it.
It's unknowable.
Hold these highs now,
And
S&P.
so, really, again, what we're focused on is, looking at the data and giving ourselves a little more time now to
I
look
see that red to
carefully at the
green.
data
That's red to
by
green.
being careful in our moves. Does it feel like monetary policy is restrictive enough to bring inflation down to 2% over time? That's the question we're asking ourselves. I think, years from now, economists will be revising their estimates of R-star as it existed on November 1, 2023. We can't really wait for that in making policy. We have to we have to have those models and look at them and think about them, but ultimately we've got to look at the effects of that policy's having, accounting for
There
the
we go,
lags,
baby. That's what
which
we're
makes it
looking for.
difficult.
If I could follow up on a wages point earlier, you talked about the inflation outlook, but I'm
423,
curious if
break
you
like
have any
butter.
concerns
Break like
whether
butter.
Wage inflation.
Break like butter. Hold these
at its
highs.
current
Hold
level
these
could
highs up,
be-
S&P.
Could risk pushing up overall inflation or reacceleration.
So if you look at the broad range of wages, they have wage increases have really come down significantly.
Order
I'm
filled.
gonna lock
Of
it out.
course,
I
it's
can't
last 18
do it,
months
guys. I can't do it,
to a
guys.
level where
You're
they're
printing today, bro. I'm
substantially
trying to pass
closer
all
to
3 of these today,
that
bro.
level that would be
I'm just
consistent
catching
with
these highs,
2%
trying to ride it.
inflation over
Trying to
time,
ride it, man. I didn't make
making
much on
standard
that.
assumptions about productivity
$60 because
over
I held
time.
it.
So it's much closer than it was.
Glad I
And
got
that's
out, though.
true of the ECI, which is the one that we got this week. It's true of average hourly earnings and compensation per hour too. So, and all of them are kind of saying that, which is great. And you have to look at a group of them because any one of them can be idiosyncratic in any given reading. So that's what you see. And so what you saw with the
this.
ECI reading was, if you look back comes out 4 times a year. If you look back a couple of quarters, you'll see it was much higher, and then it came down substantially in June. And then the September reading was more or less at the same level as the June reading. So in a way, it's just validating that decline. And it was very close to our
Oh, I'm up
expectations
200 on one
internally,
micro.
too. So I think we feel good about that. Also, I would say it isn't, in my thinking, it's not the case that wages have been the principal driver of inflation so far. Although
This one's already done,
I
guys.
think I do think it's fair to say that as we go forward, as monetary policy becomes more important relative to the supply side issues I talked about in the unwinding of the pandemic
So what
effects,
we're waiting on, guys,
it
what
may
we're
be
waiting on.
that the labor market becomes more important over time too.
Looks like another spike coming. Yeah, buddy. So yeah, dude, printer, guys. Printer.
Hi, Nancy Marshall-Genzer with Marketplace. Chair Powell, are you now as concerned about overshooting and raising interest rates too much as you are about getting inflation down to the 2% target?
So as I mentioned, I think for much of the last year and a half,
Yeah.
the concern was
Yeah.
not doing too much, not doing enough, it was not getting rates high enough in
in 2
time
micros, okay.
to avoid
Yeah,
having
guys.
inflation expectations, higher inflation expectations become entrenched. So that was the concern. I think we've reached now more than 18 months into this. You can see by the fact that we have slowed down, although that we're still trying to gain confidence in what the appropriate stance is. But you can see that.
Order filled.
Getting filled for this high or low break to the downside, if it can hit, it has to hit here, though. It's just one will get stopped out, and that's
the
fine.
risk of doing too much versus the risk of doing too little.
Order filled.
Okay, one out, one out.
Closer to balance.
All right, we're 1 for 1, baby. We're 1 for 1.
Clearly restrictive at
I was looking for the high or low break. Hold on.
That range, if you take off
that's
a
okay.
mainstream estimate of the
we're fine on it. We're fine on it.
Expected inflation, take 1 year inflation, you're going to see a real policy rate that is, well above mainstream estimates of a neutral policy rate. Now that's arithmetic. It doesn't really. What the proof is really in how the economy reacts. But I would say that we're in a place where those risks are getting closer to being in balance.
And you said the proof is how the economy reacts. What are you looking at to be sure you're not overshooting?
Well, I think what we're looking at is, is inflation still broadly cooling? Is it sort of validating the path we saw over the summer?
Setting a stop
where
limit right
inflation
there.
was clearly cooling and
a stop loss
down.
right there, guys.
We've seen periods like that before, and there hasn't been follow through. The data have bounced back. So, what are we seeing? Are we seeing is inflation still coming down? So that's the first thing. Second thing is in the labor market, what we've seen is a very positive rebalancing of supply and demand, partly through just much more supply coming online. And with labor demand still clearly remaining very strong when you have the kind of job growth we've had over the last quarter, it's still very strong demand. So, and you see wage increases coming down as we discussed, but coming down, in a kind of gradual way. I think that's what we want to see, that whole set of processes continue.
Brian Mena, CNN. Do you think that has been any structural change in either consumption or in the job market that's pushing up consumption? You obviously saw the third quarter GDP figures, which were strong, and some economists have expected revenge spending to have fizzled out by now. So I'm kind of wondering if there's been any structural change in consumption.
I wouldn't say there's been a structural change in consumption. I would say it's.
Guys, I think I'm good on the day. I don't think any of these questions after are really going to matter too much, ladies and gentlemen. I'm just going to leave. Okay. I think I'm just going to leave it where I'm at. I'm going to leave my stop loss on this one placed. But if this thing wants to spike, rip, and run, I'll be okay with it above 422. There could be something that comes out. So, I don't know. We're going to see, ladies and gentlemen. But I hope you guys have had an amazing day. I just have a meeting in literally less than 12 minutes I got to go to. So I'm very, very much grateful for today. Passed one of my account challenges. Holding this one out until, either the stop loss hits or I'll even set a take profit. I'll set some crazy take profit on it. Let's go to the 30-minute. We're at 2.8. Let's go up to 300. Okay, so those are my two spots, ladies and gentlemen. Guys, I hope you guys have had an amazing time hanging out with YB, baby. I will catch you guys all here at 9:15 a.m. tomorrow, baby, for this money market. See the results of this. So, I love you guys. I got a meeting in a little bit less than 12 minutes, so I do got to get ready for it. I love you guys. Have an amazing day. Let's get a good yeah, buddy. In 3, 2, 1. Yeah, buddy. Take care, everyone. Have a great one. Peace.